Hi, I'm James Robinson, and this is my stock pick of the week. And I use that term euphemistically because I know that I haven't been posting very many videos. The truth is I haven't been buying or selling very many stocks. I continue to look at stocks and I continue to research companies, but I'm having trouble finding things that I think are good values at today's prices. Having said that, this is a 6-month review. So at the end of June, I looked at what I'd occurred for the first 6 months of the year, and I give you a biannual report of how our portfolio would be performing. So we're going to go through that sort of little by little, and I'll talk about what's happening with my existing portfolio and some other things that are happening with the channel. So starting January 1st of 2021, I had a total portfolio value of $195,496.91. The portfolio was comprised of $85,000 in cash and about $110,000 in stocks, which was comprised in 14 different companies. Today, as of June 30th, 2021, my portfolio has grown to $231,000 and change. My cash position has gone from $85,000 down to $30,000, so I own more stocks. And now my portfolio, between new investments and growth in my existing previous stocks, is up to about $200,000. So I have about $200,000 in stocks and about $30,000 in cash. The profits for the first 6 months of the year was about $35,500, which works out to about 18.2%. It's actually closer to 20%. My stocks have gone up closer to 20%, but because I had so much cash for so much of the year, it actually works out to a return on an increase in the portfolio value of about 18.2%. In the first 6 months of the year, I earned dividends of $2,400, which is about 1.225%. And the S&P 500 during those same 6 months went from 37.56 to 42.97. So it increased about 14.4%. So yet again, we've managed to outperform the S&P 500. In these 6 months, we've done it by about 3.8%. So pretty happy with that relative performance. If you'd invested $10,000 with me on January 1st of 2018, when I started doing this channel and really working with a portfolio, that $10,000 today would be worth $18,047.02. If you'd taken that same money and invested in the S&P 500, that money would be worth $16,041. So over 3.5 years of that period, that works out to a return of 14.5% for the S&P 500 and 18.2% for me. And you can see here a chart that sort of shows how we grow. And by the way, one of the interesting things to keep in mind is that in the first year, we actually lost money. The market was down. We were down less than the market, but we were down a little bit in the first year. And so all of these profits, this 18.2% over 3 years, has really occurred in just the last couple of years. So here's some interesting facts that have come to light over the course of the year. I did a study last year, and they said, what if I had just bought and held everything and I resisted the urge to sell positions when I achieved a gain? Typically, I would sell a stock when I was up about 20% in it. So after doing that study, I realized that holding on to stocks for the longer term turns out to have been better based on my performance. So to date, in 2021, I have sold exactly one position. I reduced my position in Intel from 211 shares to 41 shares. But other than that, I haven't sold a single share all year. I haven't sold, the good news from that is, since I haven't sold any stocks, my position is aging from short-term capital gains to long-term capital gains. What that means in America, you have different tax rates based on the type of gain that you have. So if you own a profit on an asset you've owned less than 12 months, that's a short-term capital gain, and that profit is taxed as income. If you have a profit based on an asset that you've owned longer than 12 months, then that's a capital gain. It's not taxed as income, it's taxed as long-term capital gain, which is a significantly lower tax rate. So one of the benefits, additional benefits, other than the fact that my stocks seem to be performing very well, one of the additional benefits is that when I do sell, I will pay a lower tax rate on the profits that I've made. So currently I have 5 positions that qualify as long-term capital gains. The value of those 5 positions is about $51,000, or about 25% of my portfolio. And that affects about $7,000 in gains. So I've converted $7,000 of gains from ordinary income to long-term capital gain as of now. In the next 100 days, a further 25% of my funds will convert to long-term holdings, and that will affect another, based on today's positions, another $12,000 in current gains. I currently have just over $30,000 in cash, so I still have money left to invest. In other words, I don't have to sell something to buy something right now. I can I tend to buy stocks in about $10,000 chunks, so I can buy about 3 more positions before I have to sell anything. So I have no position, so I have no pressure to sell. But again, as I start to buy some of these additional stocks that I'm looking at now, it may get to the point where I no longer have the luxury of holding on forever, because if I find something that's super exciting and one of those stocks in my portfolio is less exciting, then I would probably sell an existing stock, pay the taxes in an effort to buy the stock that I think has more upside. So far this year, I have bought 6 stocks that were not in the portfolio as of January 1, although I have owned several of those stocks in the past. I also added to my position in Altria, which is a stock that was in the portfolio, and now I own a larger portion of that. My investment in those 6 stocks totals $67,000. The value of those positions as of today, which was, again, this is as of the day I did this research, so it's 7/1, is $77,804. So I've made about 10% on the stocks that I bought this year. The S&P 500 PE ratio is currently 46.3. So that's the value of the average PE ratio of all of the stocks in the market. The PE ratio of my portfolio is 23.3. So I look at that as meaning that my stocks, even though I've outperformed the S&P 500 in terms of return, my stocks are very much underpriced relative to the market, and they're cheaper relative to the market. And I think they have less risk relative to the market. My average hold period as of today is 270 days. The longest I've held any stock so far is 509 days. These are the 6 stocks that I have bought. Some of them I've owned before, but these are the stocks that I have added to the portfolio this year. Snap-on, which I think I did an analysis on a couple of years ago. Altria, USANA, Ruger, Nu Skin, Graham Holdings, and Ryanair. And we're going to talk about how each of those stocks has performed, as well as how every stock in the portfolio has performed so far this year. So here you can see a list of the portfolio as it stands as of the end of June, which would be 6 months into the year. You can see Intel Corporation in dark green is the only stock that I've sold. I'd held it for 47 days. I bought $8,000 worth of it. The investment value went to $10,000. I made a profit of $1,600. And then I kept money in that stock, 41 shares of that stock when I sold it. So then SAIC, I bought on 2 different dates back in March of 2020. And so you can see that those stocks have performed reasonably well. So let me sort of go through these columns. The first is obviously the stock symbol, and then the company name, then the date purchased, and the date today or the date that I sold it, how many days I've owned it, how much money I invested in it, what purchase price was, how many shares I bought. Then I have the price that the stock was at the end of 2020, so the price December 31, and then I have today's price. If I've earned any dividends in 2021, then that's there as well. And then finally, I have the investment value today. I have the profit in 2021, the return in 2021, and then the final column is how much money that I've made on the stock since the day that I purchased it, which would mean if I've owned the stock longer than since 2021, obviously. So looking through these, you can go through these on sort of on your own time. You don't need me to really explain a lot of these, but just some highlights to hit. Ventas stock we bought March 25th, and we bought it at $20 a share. It's currently at $58 a share. So that means that we've made 188% on that stock since we bought it. We're also still up 20% so far this year. And that's inclusive of the company paying us about $200 in dividends. Another really big performer has been Children's Place. Children's Place is up 413% since we bought it in August 27th of 20, and it's also up about 98% this year. So that's been a stellar performer, and that's a good example of profits that I made because I decided not to sell when the stock was up 20 or 25%. I've held this stock and it's performed very, very well, and it's become a nice little holding for us. Other stocks that have performed very well since we bought them, Paychex is up 76%. SAIC is up in one of the 2 trades 49%. T. Rowe Price is up 61%. Raytheon is up 47% since we bought it. And I've got a number of stocks up 30%. The good news is not one stock is down since we bought it, with the exception of Graham Holdings, which we only bought in May. So we haven't owned it very long. It's down about 5%. But every other stock we've owned is up since we bought it. Every other stock but one is up for the year. The stock that's down for the year is Value Line, which is down 5% this year, but it's still up 15% since we bought it. So our portfolio is very, very strong. The stocks that you see in this bright green are stocks that I think I will own for a very, very long period of time. They're not trades necessarily. They're positions where I either bought the stock, made a profit, sold my original investment, and kept this as a long-term hold, or they're companies that are in my top 10 or 15 companies that I've analyzed, and I just think they're such solid companies I want to own them for a very long time. The stocks that are in the turquoise are companies that I'm less married to, that I would be more likely to sell if and when the price makes sense, or if and when I needed the money to make a better investment. The stocks that I bought this year are Snap-on, which is up 34% since I bought it. USANA Health is up 20.1% since I bought it. Nu Skin is up 14%. Ryanair is only up 1%. But again, I sort of bought that thinking that the economy was going to recover for travel. And I think we all see with this Delta variant that maybe that's not happening as quickly as we'd like. Still haven't lost any money on it, but it's going to take a little longer to rebound. Ruger's up 30% since we bought it. I bought a second group of Altria. That's up 5% since we bought it. And then Graham Holdings, which I've only owned for a short period of time, and which I expect might take 6 months or a year to start to come around, is up about 5%, or down about 5%. So that's the portfolio. We're in $2,400 in shares. The portfolio value is about $230,000. $30,000 of it's cash, about $200,000 in stocks. The stock investment portion of the portfolio is up about 19.965%. The overall percentage I'm up is about 18.2% because I have so much in cash. So that's where we are for the first 6 months of the year. What's going to happen in the next 6 months? I am seriously looking at buying 3 different stocks right now. I'm completing my research on them. So it's very likely that I will be 100% invested in the next 30 to 60 days. And when that happens, I will look at selling some of these stocks. The motivation to sell a stock is going to be based on, do I think it's overpriced? Some of these stocks are trading now that I've made these significant returns, are trading at very high multiples, that it might just be time to get out and pay the taxes. Or just something significantly changed about the outlook in the company, and I think that there's, even though maybe I haven't made a profit on it, it's still time to get out. So we'll look at that as the time comes, but I've got a little time before I need to worry about that. But for now, if you'd invested in me, I think, and followed my positions, my trades, I think you'd have done very well. I think you'd have outperformed the S&P 500. I'd love to hear your comments, and thanks for taking the time to watch.